And infrastructure is the segment we're going to talk about today, and we thought we'll focus on infra companies because they've been facing the capital crunch. There's definitely higher cost of capital which they are having to bear. So let's talk to MEP Infra as well as Shrey Infra, and welcome on board Jan D. Maiskar, the CMD at MEP Infrastructure. He joins us on the show right now, and we've also got Shrey Infrastructure Management joining in to talk about what kind of capital crunch that they are facing. Hemant Kanoria, CMD at Shrey Infra, also with us. But Mr. Maiskar, if I could come to you first, what's been the cost of capital for infrastructure? Is the need for capital, would you say, much higher as projects are being awarded and are increasing at a fast pace? Is that also increasing the cost of funding thereby for you?
Good morning. As far as MEP Infra is concerned, I believe the capital has been adequately funded by the, I would say, large nationalized banks as well as a few private banks. As far as cost of capital is concerned, the current cost of company borrowing is around 11.25 on, I would say, hybrid annuity, and on the, I would say, the current TOT or the monetization projects which the company is handling is close to around 10.5. As far as availability of capital is concerned, I believe currently the market is, I would say, well funded in terms of particularly the HAM projects which the government's initiative has really fructified. So we don't foresee any specific challenge as far as the capital raising is concerned for funding of these projects.
Mr. Kanoria, morning, bringing you also into the discussion, considering you have a market share of nearly about touching 33% in the construction, mining as well as allied equipment finance space. As an industry player, are you seeing growth opportunities from here onwards? And if so, which segments do you see growth kicking in faster?
See, basically the growth has been happening in the road sector primarily, and now we think that it would be opening up in the railways also. Road sector last couple of years has done quite well, and the government's providing all the support to the road sector, getting the projects on track, awarding more EPC contracts. Whatever BOT projects were also stuck up, so the government has proactively tried to find out solutions for that. So I think that road sector is on track. The mining sector has also picked up. What has still not picked up is the power sector. And railways also, I think that because we see a lot of announcements that the railways will also be going in for large modernization, track laying, and there will be a lot of EPC contracts which will be also awarded. So which augurs well for the construction companies, and thereby because construction companies are the biggest clients for us. So therefore, if they are doing well, then definitely the market would also pick up.
Mr. Kanoria, are you getting a sense that PSBs and PSUs now will be slightly reluctant in lending to the infrastructure sector, not because of viability risk, but purely because of growth capital availability? You know, I met a couple of PSB chairmen last couple of days, and the sense I've come back with is that after the RBI provisioning, a lot of the recapitalized amount which has come to them would be actually will be utilized only in NPA provisioning. So the net result is that they don't have enough growth capital. Are you getting a sense that that holds true?
You're absolutely right. You see, if you look at it from one perspective, the liability side management can be by way of capital infusion, but that is not the solution. The problem is on the asset side. So the asset side has to be set right. For the asset side to be repaired or to be brought on track, what is very much required is the industries which are facing problems. Those industries need to be addressed, like power. Power sector would have close to about 5 lakh crore of stuck up NPL assets. So if that 5 lakh crore can be addressed, you don't need to infuse capital, and that is what we have been saying time for the last so many years, that it has to be addressed. The asset side has to be addressed for any company. For example, I'll just take my example and our company's example, that basically in the infra space we have been there for last so many 29 years. About 4-5 years back, there was this problem. There was a slowdown which had happened in 2013-14 onwards. So therefore, what we did was we concentrated on the asset side and said that, okay, whatever the problems are, how do we address them? How do we work along with the clients instead of just coming out with guidelines and telling that, if you fit into this, it is fine. If you don't fit into this, you will be sent to the cemetery. So that way, I don't think so it is going to work. And whatever capital that we may be infusing, all the capital will get sucked in, because if we keep on deteriorating our assets and not reviving our assets, we can put in 10 lakh crore and the 10 lakh crore of capital will get sucked in because you have 10 lakh crore of NPL. So that is not the solution. I think the solution is to address the asset side, see that what the problems are, like the steel industry, for example. The steel prices have picked up. So therefore, we see that the recovery in the steel companies, if there is a recovery in the steel companies, if the companies are being taken to NCLT, to IBC also, there would be a demand for people to come and buy those companies. Let's suppose, for example, that the steel industry was not doing well and the companies were pushed into IBC. The banks would have lost a huge amount of money because there would be no appetite for anyone, either domestic or international, to come up and take over these particular companies. So I think that it is very important to focus that how the asset side should be recovered. It is not just putting that if a person is sick, you straight away don't treat him, but put him into the cemetery. I don't think so that is a solution.
Fair point. Mr. Maiskar, are you getting any feelers, any pushback from any of the nationalized banks that they are likely to not extend the credit line? And I'm not talking about MEP specifically here. I'm talking about the road companies in general. Are you getting a sense that road companies, after what's happened to PSBs and the kind of write-offs they will have to do as per the new RBI guidelines, they would be slightly reluctant and they would be slightly hesitant in extending credit lines to road companies and infra companies?
As far as the infra sector is concerned, particularly on the road side, I believe the current government's initiative is predominantly into two parts. One is the projects where there is a lot of EPC happening, where really large amount of capital is not required. So I believe that portion of the companies or in the sector which are currently working should not have a concern. As far as companies which are developing, which are in the developer sector, predominantly have to really think on this particular line as far as raising of capital is concerned, predominantly on account of two things. One is the regulator, that is the RBI, coming very heavily on the, I would say, delays and defaults, which definitely affects companies' ratings, which, I mean, in terms goes into the ability to raise further capital. Second also is the current scheme of things, where we have seen large amount of, I would say, not so good things happening over the last 2 months as far as the public sector banks is concerned, which also impairs or affects their ability to evaluate good project from bad project, and thereby, I would say, definitely slowing down on the funding portion concerned as far as the hybrid annuity projects are concerned.
And Jayant, would that also include some innovative methods of perhaps asset-light funding, which you think are the need of the hour and should be used more for getting funding of infrastructure projects?
I think what is really important is to, I would say, take into consideration the ability to raise capital at a cost which is competitive, thereby which allows the developers to revitalize the sector, which is on the fast track. As far as getting capital is concerned, I think there are two ways of doing it. One is the direct borrowing, which that usually the companies do from, I would say, nationalized or as private banks. The other way of raising money can be the innovative structure, as you said, would be bonds. Because the hybrid annuity projects are, I would say, rightly poised for able to tap the bond markets during construction and post-construction, which allows, I would say, raising of good amount of capital for doing the construction of these particular routes.
Mr. Kanoria, closing comments from you. Do you think this is more like a blessing in disguise for a company like Shrey Infra, because you understand the risk management you understand the risk management, and you also understand, what could be the impact of rising interest cost and rising bond yields in the credit market. So at a time when infrastructure demand is strong, infra companies are getting serious backing from various ministries, and if PSBs are not lending, is that a large market which is suddenly opening up for a company like Shrey Infra?
No, definitely. I think that you're absolutely right that it is, because for Shrey, we are absolutely up to our neck with the kind of proposals that we are getting. But we are just one company, and infrastructure sector is so large. So therefore, I think that structurally, if the PSU banks do not lend to the infrastructure sector, our whole objective of the development of the country will get affected. So therefore, it is very important to bring the PSU banks back into the infrastructure sector, because earlier we used to have financial institutions like IDBI, ICICI, etc. All of them, they have become banks. So therefore, we don't have any other financial institution. IDFC has also become a bank. So we are the sole player today. So from the perspective of our company, definitely there is a huge demand. We'll keep on doing well. But that is not satisfying, because you want the whole country to develop, you want the market to develop, and we have been in this sector for almost 3 decades. So we want this sector to be vibrant, it should develop, because then only the country can be on a growth trajectory. So therefore, I think that it is important that the government has to sit down and see that how they can again get the PSU banks to start financing the infra sector.
Okay, gentlemen, appreciate your time. Thank you for joining us.